For many investors, getting paid after every 3 months is standard, but let's be honest, waiting for 3 months to see any return can be frustrating at times. You've got to make sure your investments are working for you, so why wait months for them to pay off when there's a strategy that can get you paid every week? In this video, I'm going to show you and John how to break away from that traditional mindset and unlock a whole new strategy of investing that pays you weekly dividends. I'm going to show you how to use 12 carefully selected high-yield dividend stocks to create a steady, reliable stream of income that you can count on every single week, ensuring your income flows in like clockwork. I'll walk you through why each stock is a great pick and how they all work together to create that consistent cash flow. In the end, I'll show you how this portfolio and strategy can pay on average $300 to $400 from the first week. Before we dive into the stocks, let's set the stage. Why even consider dividend stocks in the first place? Well, the idea is simple. You invest in stocks that pay you dividends on a regular schedule. And by choosing the right stocks, you can build a portfolio that provides consistent income every week. The best part, you're not selling anything. You're just holding on to these stocks and letting the dividends roll in. But before we get too excited about the potential cash flow, let's talk about what makes a good dividend stock. Yield is important, obviously, but so is stability. You don't want to rely on stocks that have fluctuating dividends or ones that can't maintain regular payouts. That's why I focus on stocks with a solid track record backed by solid companies that can weather the ups and downs of the market. Now that you know why dividend stocks are a great choice, let's talk about how to build a portfolio that generates weekly income, because that's the key to making this strategy work. Instead of relying on just 1 or 2 stocks that only pay you quarterly, I'm going to show you how to set up a system with 12 dividend-paying stocks, each on a different payout schedule. This way, you're spreading out your income so you're getting cash in your account every week, not just once every 3 months. Here's how it works. Each of the 12 stocks I'm sharing with you has a different payout date. Some pay at the start of the month, others pay mid-month, and some pay closer to the end. By staggering the dates, you make sure there's always something hitting your account week after week. It's like putting together a puzzle. Every stock is a piece that fits into the bigger picture of making sure the cash keeps flowing. But I'm not just picking random stocks for the sake of it. I'm looking for 3 things: high dividend yields, financial stability, and a mix of industries. That way, if one sector takes a dip, you've got other stocks in different industries to help keep your income steady. I'll be choosing from areas like real estate, energy, and finance, so no matter what happens in the market, you're still getting paid. Sounds like a lot of work, right? But don't worry, I've already done the heavy lifting for you. I've picked out 12 top-notch stocks that fit this strategy perfectly. High yields, different payout schedules, and a mix of industries to keep things balanced. All you have to do is follow along and watch the cash flow. So let's start with January, April, July, and October. These months kick off your weekly income strategy with solid high-yield stocks that'll set you up for the year ahead. In week 1, we start strong with BDCX. E-Trax quarterly pay 1.5-time leveraged Wells Fargo BDC Index ETN. That's a mouthful. This is an exchange-traded note, an ETN, that tracks business development companies, or BDCs. With an impressive 14.57% dividend yield, it's a great way to jumpstart your income in the first week of the month. Moving to week 2, I've got NHPAP. National Healthcare 7.375% preferred shares Series A stock. This is a stock focused on healthcare properties offering a stable 13.2% yield. Healthcare's stability makes it an attractive option, and its steady payout will help keep the cash flowing consistently. For week 3, there's CWPS, Conwest Associates, Limited Partnership Units. It comes in with a 15.89% yield, bringing exposure to leveraged BDCs that provide financing to smaller companies. This higher yield stock is perfect for those looking for a bit more income mid-month. Finally, in week 4, we wrap things up with TWO, Two Harbors Investment Corporation, a real estate investment trust, or REIT, with a 13.46% yield. TWO invests in real estate-related assets, rounding out the month with solid, reliable dividends. Now, for the months of February, May, August, and November, I've got some great stocks that add diversity to your weekly income strategy. Starting with week 1, I have ABR, Arbor Realty Trust Incorporated. It's a real estate investment trust, or REIT, that specializes in multifamily, commercial, and healthcare real estate investments. With a 14.26% yield, ABR offers both stability and high returns, making it a great choice for those looking to add real estate exposure to their portfolio. In week 2, I went with AB, Alliance Bernstein Holding Limited Partnership Units, a global asset management firm offering an 11.39% dividend yield. This one provides a bit more stability compared to other high-yield options, making it perfect for those who want a mix of growth and consistent income. For week 3, I have ARLP, Alliance Resource Partners Limited Partnership Common Units, a master limited partnership, or MLP, that focuses on coal and natural gas extraction with an 11.32% yield. While this stock comes with more risk, it offers a solid return in the energy sector. Finally, in week 4, HTGC, Hercules Capital Incorporated, delivers a dependable 10.61% yield. As a business development company, or BDC, it focuses on tech investments. HTGC blends stability with potential growth, rounding off the month with solid dividends. So now let's move into the months of March, June, September, and December. For week 1, we've got SPQ, Simplify U.S. Equity Plus Quantitative Investment Strategies ETF. This is a hotel-focused REIT that offers an incredible 18.76% yield. This stock is perfect for those looking for a big return right at the start of the month. With the hospitality industry recovering and growing, this is a high-reward pick. In week 2, WHF, Whitehorse Finance, takes over, providing a 15.51% yield. This business development company, or BDC, focuses on providing financing to middle-market companies, making it a great choice for this portfolio. For week 3, I have TRIN, TRIN, Trinity Capital Incorporated, also a BDC that specializes in venture debt and equity investments. It offers a solid 12.9% yield, which strikes a nice balance between risk and reward. Finally, in week 4, Cion, CION, which is Cion Investment Corporation, bringing in a dependable 12.38% yield. This BDC focuses on debt and equity investments in small to mid-sized businesses, making it a solid pick for a consistent income stream with room for growth. Now, in the end, I'll explain how this portfolio and strategy are capable of paying out an average of $300 to $400 right from the very first week. These 12 stocks come together to create a well-balanced, high-yield portfolio that will pay you every week. The goal here isn't just to chase the highest yield, but to create a reliable income stream that you can count on. So all in all, which stocks will pay you in which month? For this portfolio, the monthly payouts should look something like this. Since we know what each stock pays in dividends, we expand the chart to include their dividend yields. Okay, so now that we've covered these high-yield options, let's talk about how to put this strategy into action. The first step is deciding how much capital you're comfortable investing. The amount you put in will directly affect how much weekly cash flow you'll get. Ideally, you want to invest about $120,000, splitting it equally $10,000 into each of the 12 stocks. This makes sure that no single stock dominates your portfolio, giving you a balanced, diversified income stream. If you don't have $120,000 to start, no problem. You can still get started with less and gradually scale up. The beauty of this strategy is that you can reinvest your dividends to grow your income, so even a smaller initial investment can grow over time. Once you've set your budget, it's time to buy shares. Timing is important here. To maximize your dividends, you'll want to purchase your stocks just before the ex-dividend date. This is the cutoff date that determines if you qualify for the next dividend payout. Buy before the ex-dividend date, and you're set to receive the next payout. If you miss it, you'll need to wait for the next cycle. Now, the big question on everyone's mind is, what are the expected returns and average weekly income? So what kind of cash flow can you expect from this strategy? Well, the beauty of this portfolio is that once you've got it set up, you'll be receiving dividends every single week. No more waiting around for those quarterly payments. If you've invested around $120,000 split evenly across these 12 high dividend stocks, you can expect an average of $300 to $400 per week in dividend income. That adds up to around $1,200 per month or $14,400 per year in passive income. Of course, not every week pays out the exact same amount. Some weeks will be higher while others a bit lower, but the important thing is that you're never waiting months for a payout. Let's break it down a bit more. Since these stocks have staggered payout schedules, you'll see income coming in from different stocks each week. For example, in January, you'll receive dividends from BDCX, NHPAP, CWPS, and TWO, totaling around $1,428. February brings dividends from ABR, AB, ARLP, and HTGC, giving you about $1,190. Some months, like March and June, will bring in even more, close to $1,489 because of the higher yield stocks. This pattern keeps going smoothly through March, April, and all the way to December, creating a consistent flow of cash every month. As each quarter rolls around, these dividends repeat, making sure you have a steady income coming in, usually between $300 and $400 a week. So what makes this strategy so powerful? You and John won't have to wait months or even a whole year for your returns to show up. With traditional dividend investing, you're stuck waiting for those quarterly or yearly payouts, and honestly, that could feel like forever. But with this system, you get paid every week, right from the start. No more waiting around. Instead, you'll have that cash flowing in every week, making it feel like you're getting a paycheck 4 times a month. Want to know how to turn a $20 per week investment into a portfolio that pays over $6,000 in monthly dividend income? Click the video on the screen to find out.